Hi everyone. Today is the start of an exciting new journey for us as we get into what we'll be calling as the Investor Masterclass. And in this we are going to be trying and explaining some simple financial concepts and try and break it down for the common person to make sense of it. And the first topic that we are going to start off today is to try and understand the various asset classes. So broadly, if I have to categorize them, I'll say there are four asset classes. There is equities, there is debt or fixed income, then there is real estate, and then there is commodities. So these are broadly the four asset classes in which household investments go into. And two of them are more understood. The latter half, which is real estate and commodities, is something which is more common with the Indian investors. A lot of people have invested in these in various forms. Gold and silver, if you see, is common across households in India. So most of the housewives, they will have jewelry. Many of them also hold coins, bars of silver and gold. So this has been a traditional go-to sort of investment for a lot of individuals, as well as real estate. So owning your own dream home has its own charm, and I would definitely advocate that yes, if you're looking for that, you should go ahead with it. But apart from that, also a lot of households have investment in real estate, which is just from the perspective of revenue generation or capital appreciation. Equity and debt is relatively little less understood. So as simple as these concepts are, we just get into nitty-gritties and try and understand them. And we are going to do this with the help of an example. So let's say that me as an individual, I am Ravi, I want to set up an ice cream shop. Yeah? And I do the math around it and I understand that I need roughly about 20 lakhs to set up this ice cream shop. I look into my bank and take it from my family and I'm able to gather, let's say 8 lakhs. Right? I have this 8 lakhs with me, and then this is my own money or funds. And then I look at a few friends, I discuss with them, and some of them are willing to lend to me. So a friend says that yes, I have 4 lakhs which I can lend to you. And I don't want interest on it, but can you make me a partner in the business? I tell to him that yes, let's not become partners per se in terms of management, because I want to have my own way of running the show. You could invest in it and I can give a piece of the ownership to you. This is the simplest way of understanding equity. So this individual who invests 4 lakhs out of the 20 lakhs in my business, he has 1/5 of the ownership or 20% stake in the company. This is very similar to what happens in the share market. A company, when it becomes really large, it approaches the common investors for their funds to be taken in, which happens in the form of a primary issue, which is also called an IPO, and they raise money from individual investors. And there's a very, very small fractional ownership which comes to that individual investor. Over a period of time, as this company grows, as their earnings multiply, this is what is going to be passed on as revenue to those investors, which is also known as earnings per share. Simple way of understanding equity. So back to my ice cream example, I had 8 lakhs of my own, 4 lakhs I borrowed from a friend. Now for the balance 8 lakhs, I approach a bank and I tell them that look, why don't you lend some money to me? I'm sure this is going to earn revenues. I give a nice projection in terms of the kind of revenue we are expecting in the coming years. And then the bank says, all right, we can lend this 8 lakhs to you and we are going to charge interest on it. So let's say they say 12.5% interest on it. So on the 8 lakhs, I have to pay 12.5%, which is 1 lakh a year in the form of interest to them. And the principal also has to be repaid in some way. Right, so this is a form of debt, whereas it's generating a fixed income for the person who is lending the money. In this case, the bank. The bank is lending the money and they have a fixed rate of interest. Irrespective the business is in profit, loss, whatever, I need to make this interest payment good to the bank. And this in very simple ways is understanding equity, debt. Also you look at now commodities and real estate. There need not be physical ownership of these products. There are digital ways of investing. So in further classes we may cover this, but you have REITs which are broadly listed on the stock markets. You have some privately placed called SM REITs, which are smaller issues which are also present. You have commodity investments in form of ETFs, fund of funds, etc. So yeah, there are a lot of instruments through which we can invest in any of these. We'll look into that in subsequent videos. For now, all I'd like to say is if you like this kind of content which is being generated, you feel there are any family members, friends who would like to go through this and understand, please do help us spread the word. You could visit our social media handles, our website, and spread the word as well. And thank you so much for watching this video. We hope to see you in the next one.